Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and aim to support you in your self-employment, helping you to navigate the tax system as it applies to you. Today, we're going to talk about accrued expenses, what they are and how you account for them. Before I get on to that, if I could please ask, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to navigate to a whole host of information that we have available on our channel. In our playlist section of our YouTube channel, we have loosely catalogued the information to try to help you to find the information that is most relevant to your circumstances. So back then to accrued expenses. What are they and how do we account for them? So thinking, as we often do, of the ultimate aim, when we're compiling our accounts, preparing them for the submissions, on likely what the tax liability is going to be calculated on, it's important that what we're trying to achieve in our profit and loss, we're going to have our sales and our expenditure and then our profit. And what we're trying to ensure is for the period that we are reporting, whether it be a tax year or a financial period, that the sales and the expenditure match each other. Therefore, any expenses that are incurred for those particular sales fall in the same period as those sales do. So when we're talking about accrued expenses, what we're saying is that we have incurred some liability. We've actually made that expenditure that really should be on that profit and loss because it was for those sales, but perhaps we haven't had an invoice yet, so we're not actually able to accurately reflect that. So a good example of this that's quite easy to think about is accounting costs. So if you have somebody helping you to prepare your year-end accounts, then the cost can't actually be even incurred until after the period has ended, but it is for that period. So really, we would want that to be showing on the profit and loss for that year. And in this scenario, of course, we haven't got an invoice because the work hasn't actually been completed in the year, albeit it is for it. So in this instance, we would estimate what we thought the cost was going to be. If you're VAT registered, you would be thinking of the net cost, and we would account for that in the account. So therefore, what we would do is bring it into that profit and loss so that it was accurately reflected in the year that the expense relates to. Now we do this by way of a journal if you're using software, but what we're ultimately doing, if you imagine when you incur the cost within the financial year, some things are also happening on the balance sheet when you incur that expenditure. So you will perhaps have received an invoice within the year for some expenditure that was actually occurred and accounted for within the year, maybe a cost of sale. You received the invoice. You've either paid that invoice straight away or you have some credit and it's added to your creditors. Either way, the other side to that transaction, that expense in the profit and loss impacts the balance sheet. It's either increasing your creditors, i.e. that invoice isn't yet paid, so we're adding it on the balance sheet to the creditors balance, or it's reducing the bank account balance, reducing the assets of the company. So in one way or another, everything that you do to the profit and loss will have an impact on the balance sheet. So when we come to accrued expenses, they're not impacting the creditors within the year because nothing's happened within the year. We don't have an invoice and we haven't made a payment. So it's not impacting the bank account and it's not impacting the creditors. So what we do is we effectively have a code, a pot, if you like, on the balance sheet for accrued income. So in order to bring that cost into the period that we want it to for the profit and loss, we're going to effectively debit the profit and loss, so bring that expenditure into that profit and loss, and we're going to credit the accrued income on the balance sheet. So if you're doing, as I say, if you're doing that in software, you would do that by way of a journal. And the way to ensure that you've created that correctly is once you have completed that, enter that journal. If you look back at your profit and loss, you should see the expense increased by however much the income is that you've estimated, sorry, the expenses that you've estimated that you want to move across. Now, when you go into the next year, when you are going to have that invoice to raise, what we would do is we would what we call reverse the accrual. So if your year end, for example, was on the 31st of March and therefore your accounting period ends on the 31st of March, then you would have introduced that accrued income as of the 31st of March. You would have introduced the expenditure, therefore reducing the profit on the profit and loss, and you would have credited your accrued income part, therefore created that onto the balance sheet. And then when we go into the new financial year, so therefore in that example on the 1st of April, we would reverse. So effectively we would credit the profit and loss, the expense account, and we would debit the accrued income. So if you can imagine now, that accrued income part on our balance sheet is now zero. That's all been cleared. And if at that point in time you looked at your profit and loss, you would then see a negative figure for the expenditure. And then what would happen is when that invoice came in and you entered that, if that was exactly the same, amount as you'd estimated, you would therefore see the expense set to zero. And of course, that is entirely correct because we already accounted for that expenditure in the previous financial year. So that is exactly what we're trying to achieve. If the expense was a little higher than we estimated, then some of that would fall into that year. And if it was a little lower, then we would still have a little bit of a credit. And of course, if it was an ongoing thing, like the example of accounting costs, then at the end of the next year, you would likely create a new accrual. So some things might be an ongoing thing, such as accounting costs. Some things may be a one-off cost. So sometimes people choose not to reverse the accrual; they leave those in their accounts. And then at the end of the next year, they work out what their accruals are and whether they're still the same amount. It still has the same impact. It just can be cleaner to reverse them because you're starting from a clean sheet, and it can be hard to keep track over years and years what the actual accrual is for if you combine them together, if your accounts are complex. Now, sometimes people say, "Oh, we've not ever done this. Is that a problem?" Well, no, it's not. So one of the other things that we have to think about is consistency. So if you imagine in that scenario, for example, in 1 year we've accrued for say accounting costs, and then we reverse that at the start of the year, so there's no cost. And let's say then, for example, that we the next year we didn't accrue, then 1 year we're going to have no costs, and the other year we're going to have 2 costs. So the important thing is to be consistent. And also sometimes it depends on the value and whether and how materially this impacts your accounts. So as I said at the start, what we're ultimately aiming for is sales and expenditure in the year that they match each other. So the year that actually that cost relates to. Now, in the scenario of something, again using the example of accounting costs, if you didn't accrue the first year, then you're just going to have a cost in every year, and it just means at the end, in your final year of trading, that you would have sort of costs after the end of the year, so you have double in the last period. So if you started doing accrual partway through your accounting, then you would have double at that point. But as long as you're consistent, and you're either doing something or you're not doing something, to try your best to make sure that that income and expenditure matches, then that is the important thing. So hopefully this helps you to understand what accrued expenses are, when to think about this, and how to account for it. As I mentioned earlier, if you haven't already, please do subscribe to the YouTube channel, and I hope that you found this information helpful. Thank you for watching. Goodbye.